Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update. Are interest rates going to go down? What are going on with interest rates? Well, I'm going to give you the straight scoop. First off, interest rates, have been hovering between 6.5 and 7 now for, sometimes they'll get up to 7.5 or so, but for the most part, the buyers that are waiting for rates to go down to 5 something have really a long time to wait. Actually, right now, interest rates are as low as they have been in the last year. So 6.25 to 6.5. The Federal Reserve is going to meet in September, and everyone's saying that they're going to lower the discount rate, but that might not change the actual interest rate. Remember, they're not really connected per se, but yes, a lot of times interest rates follow the Fed rate if the Fed rate lowers down. Remember, the Fed rate is what they charge for you to get a car or a HELOC, or what they charge the banks for the banks to borrow money. Doesn't have any direct, tie-in with interest rates, with mortgage rates, but at the same time, it does affect it. One thing that we've seen, so why aren't rates going down? Because normally when the economy is not good, rates go down. And that's just the way it works. When the economy is doing well, that's when you saw rates go up, when the home prices were red hot. Because what happens is when the economy is doing really good, inflation is taking off, what the Federal Reserve will do is they'll tamp down. They'll actually raise the mortgage rates or raise the Fed rate to basically raise the mortgage rates to slow down, to tamp down the inflation. And that's what they've done since 2022. But they've been slow to react right now. Now we're seeing the 10-year Treasury bill went down again, and usually the interest rates follow the 10-year Treasury bill, but what's happening is that gap between the 10-year Treasury and the interest rates is widening because artificially the Federal Reserve is keeping interest rates higher because they're so afraid of inflation taking off again. And remember, the higher rates, that's the way they tamp down the inflation. The other thing, which we're going to find out in the next couple of days, is a jobs report. Because if there's a lot of employment, then the Federal Reserve says, okay, well, people have money, so, let's keep the interest rates high because people are spending money, which obviously raises the inflation rate. So really, it's, they look at a lot of different things, but here's the bottom line. Bottom line is rates are probably between 6.25, 6.5, the best they've been in the year. They might get between 6.25, but the rates that we have right now, we're going to be living with them probably in the next year. Don't expect them to jump way up or come way down. Matter of fact, so let's talk about recent rate stability. It benefits both the buyers and sellers. One, it benefits the sellers and the buyers because what people want is certainty. And what happens, and the same thing happened after the tragedy in 9/11 or after COVID, the market literally just stopped because the uncertainty, that's what buyers don't like and sellers don't like. They don't like the uncertainty. Well, now we basically have a pretty certain market where it's recycled over 5 years, where we're at now as far as homes on the market. They say, well, homes on the market are up like 40, 50%. Yeah, they're back to 2018-19, which was the last normal year. Same thing with the interest rate. So we really kind of have a normal, stable market. Look at this graph where it says 30-year fixed rate mortgages. You can see up and down, up and down, up and down all the way since January of 22. But you can see over the last year, they've been very stable, very little movement over the last year. And look at the buyer demand is up slightly this year because interest rates have gone down a little bit. So the orange line is obviously the buyer demand, and these are based on mortgage purchase applications. And then when you look at mortgage rates and the projections, you can basically see that where we are is the Fannie Mae forecast actually has it going down to 6. The Mortgage Bankers Association forecast has it going to 6.4. And Wells Fargo has it going to 6.6, and right now it's 6.8. It's come down a little bit since then, but the bottom line is everyone thinks it's trending down, though it is trending very slow. So what's going on with our market here? Well, first off, one of the things we talked about, July is kind of the peak where there's the most homes on the market. then it will gradually go down and down and down. And this last August, just like most Augusts, are one of our slowest months of the year because people are getting ready for school, they're getting their last vacations in, so you don't see a lot of activity. You certainly don't see a lot of homes come on the market. And here's where we see it. Look at the active properties have really gone way down in San Ramon, and pendings are actually up. So it's a very active market, you know, in San Ramon, and still a seller's market, but not by that much. Look at the Danville market. Look how much inventory has dropped over the last, remember, these are, every bar is every 2 weeks. So over the last 6 weeks, you know, it's gone from 177 active listings, 141. And pendings have stayed pretty stable in Danville. And then Alamo market, again, look at 6 weeks ago, 43 down to 34, which is a third. But pendings are actually down there. And that's part of the market that we're dealing with in August. So, and then we'll see Dublin. Dublin has always been pretty consistent. As you can see, it's almost identical, you know, in the last 6 weeks. So what we'll normally see is the fact that what happens is it slows down in August, and then after Labor Day, which now we're after Labor Day, things will normally start picking up as the buyers come back in the market, people get settled. And if I'm a seller, I'm telling my sellers that you have about a 45-day period where the market is going to be fairly active, where you have to put your best foot forward. So if you need to sell, put whatever that best foot forward, put it forward now, and don't hold back. And if you're a buyer, you should be out there. Don't wait for interest rates to go down, because, you know, we used to say, you know, basically marry the house and date the rate. Well, we don't say that anymore, because we talked about when rates go down, you dump the ugly rate and then, you know, get a lower rate. Well, you know what? We might see enough go down, maybe to refinance once, but probably not a whole lot. We maybe 0.25%, which is really not even worth refinancing with any costs associated. The other thing, when you go sold price to list price, you can see this is really the first week where there hasn't been anything 100% or more. And so we're starting to see that a little bit more. Remember, August is a slower month and people are coming in. Average time on the market, remember, used to be 2 weeks, 3 weeks. It's about 30 days now. So the homes that are out there are still selling, you know, and they're selling within 30 days, and they're getting pretty close to asking price as you see. But always remember, every home and every market is a little bit different. If you want to just get a consultation to sit down and say, hey, what does my home look like? It doesn't, you know, whether you sell now or a year from now. The nice part about doing this for 48 years, I'm not tied into whether financially, whether you sell your home now or 2 years from now. We're going to sit down and do a plan with you. And, you know, usually 25% of the time when we sit down with people, selling isn't the right mode. Same thing with buying. Though I will tell you, good time to be a seller, good times to be a buyer, because there is stability out there. And that's what everyone wants to see, is stability before they move forward. So give me a call, Joe Kehrig, 925-487-6838, or drop me an email, joe@KehrigTeam.com, or visit our website to learn more about the Kehrig Team and also to see all of our listings, www.KehrigTeam.com. Have a great day, and stay tuned, because we're going to get the jobs report. Let's see what interest rates do, but chances are they're going to stay pretty close to where they are now. Have a good one.